Good morning, guys. It's Max. Kind of a cloudy day here in Austin, but a good day to do a little YieldMax position report. Or we're actually going to talk about the uncapped upside on the YieldMax funds. We're going to do our call spread report, and there's Jackson behind me. Hey, Jackson, you want to come say hi? Jackson? Well, he's being stubborn. There he is. What's up there, buddy? Hey there. Well, today we're going to talk about YieldMax, like I said, and I have the triple threat spreadsheet working again, and I know people like the triple threat spreadsheet, so hopefully everyone will be happy with that. Okay, so here is the triple threat spreadsheet. It may not be very much to look at, but what it tells us the point at which YieldMax starts realizing extra money because of the uncapped upside. This is the uncapped upside report. All right. So what this tells us that Google's upside is uncapped for GUI above the 195 strike. And those options expire on the 8th, but Google has their top strike as 195. At least it was the other day. Let's go to the bottom of the list. I just did these today. Abney's top strike is 160. Okay. Now let's look at what the triple threat, or let's look at what this column G shows us how far we are away from taking advantage. We want this to be plus. When this is a plus number, it means we're over the call spread. It means we're running loose in the uncapped upside. We're on the loose. Okay. So the blue line at the very start that you can barely see is how far out of the money we are, but I made an adjustment on it. It says 0.13%, but it's really 1.3% out of the money. What I had to do, if it was the true amount out of the money, some of these are like 30 or 40% out of the money, and it would make the scale, it would throw off the scale where you couldn't see. Basically, the red and yellow is basically the buffer report. We basically merged the buffer report and the uncapped upside report together. I'm having problems with the scale, so I had to divide it by 10. Hang on a second. Okay, so for instance, here's what I'm trying to say. SMCY, they have uncapped upside, but they're really actually 30% away from it, not 3%. Okay. But if they were 30% away from it, like they really are, it messes up the scale of this chart. So I'll think of a way to address that. But in any event, just looking at the blue, you want the blue to be above the line because that means that the spread's actually in the money, like it is for MRNY. And look at that. And then not only that, red is how much MRNY is up, and yellow is how much mRNA is up. This is what you want to see above this is the triple threat. You're above the call spreads in the money, and you're making more money than the underlying is. Think about that. You're making more money than the underlying is, and you're paying yourself a dividend. So if you could do that, and you can't do it consistently, but if you could do it, it's free money. AMDY is still quite a bit away from from being in the money, but they're also outperforming the underlying, which is great to see. But then on the bad side, we have GUI, GUI, Coney. Well, we have two Coneys. What in the hell? How'd I have three Coneys? You got to be kidding me. Well, I did have two right there. And I forgot I put three. Okay. That's cool. Anyway, obviously Coney's pulling back today, but you see none of the reds are down more than the parent, which is great. Fiat's an inverse. It shouldn't even be included on this chart. I'm going to take it off this chart and make it the separate chart for the inverses tomorrow. My apologies. So let's just kind of go through these and see what else is happening. Here's SMCY is a long way from their call spread being in the money, but like about 17%, but they are catching all of this sweet upside. Let's check out SMCI. Of course, it's SMCY. Sometimes I say SMCI. Sometimes I say SMCY. I'm sorry. I need to be consistent. Okay. Well, how much is that up? That doesn't look like it's up that much, but the scale on these charts is, it's 5%, 5.76%. Nice job, SMCI, SMCY. Now let's go back to the call spread report. What we're actually looking for is a price of 39. I have the trades over here, so we can go look at it real quick. SMCY, their top call spread is 39. They have 2,725, or the top long leg is the 39. It looks like they're short the 34. Long the stock, short the 34, but they're also rolling. Some of this was from last week, and they're rolling this. The latest position is 39. 39 is the magic number lately. The price right now, 27.50. Yeah. So we're looking for a price of 39. We might as well put this on the, and we need it by Friday, but if Trump wins, the markets will rally. Probably they'll rally either way, maybe is what I'm thinking, possibly. But anyway, if tech takes off, but Trump has the tech bros are supporting his campaign and running it. So things like this would blow up if he were to win. Okay, so that's what we're aiming for. 39. There's our profit box. There's our profit box. We need it to end by Friday. I didn't make it go quite far enough. All right. That's a visual target. That's what we're looking for. So that's not asking that much of SMCI. All right, back to the call spread report. Let's go back to this. Anyway, great job, SMCI, almost beating the parents, getting almost all that upside. Same thing with XOMO, getting a ton of upside. Look at this, AMDY pulling the Menendez brother. That's really nice. That is nice to see. And their call spread's nowhere close to being in the money. Lots of times what happens, though, is they've already made their call spread from, sometimes what's going on is it looks like their call spread's way out of the money, and it is this one, but they just rolled from one where they went in the money. But these are this is just the latest trades, and we'll just keep this updated and kind of see how everyone's doing. And this will be the new buffer report, because we want to check out how well they're doing compared to the parent, but also now that Jay has call spreads, we want to see where we're uncapped. And if you have a blue line that's above and you're outperforming the parent, that's like MRNY is, that's what you're looking for. But you're also looking for, if you're just outperforming the parent at all, like AMDY is beating the parent bad. So, but the triple threat would be MRNY, what they're pulling today. All right, so let's go back here to the call spread report. I have crash on here. Like I say, I'll take crash and fiat off, and we'll have a separate call spread report, or a separate report for the short funds. I saw they renamed these funds the short funds. It said they will now, on their prospectus, or not prospectus, somewhere I was checking it out, it said they will now be referred to as the short ETFs. Anyway, okay, so I also am going to show you guys one trade every day. So today's trade we're kind of drill down on, and we'll follow it. is Amazon. All right, so they have a ton of shares, like about 1 million, and they sold 9,800 call spreads. So this puts them in a bullish position. Bezos kind of aligned himself MAGA lately by pulling that that endorsement of Kamala. So I could see if Trump wins, this stock going up. Now, I'm not saying Trump's going to win. I think it's at 50-50 at this point. But I'm saying I think this stock will go up. And maybe just the fact it may go up no matter, the market may recover no matter who wins. Sometimes just, the fact that the news is out. So on this one, what they actually did is they sold the 207.50. So I always like to show this example. This is the way that they would have done it like 2 months ago. And there's nothing wrong with this way. If you do it this way, where you just sell a covered call, not a covered call spread, you do it this way, here's the upside you get. You get 5.8%. If your call spread goes to the money, your NAV will go up. The NAV of the fund should go up 5.8%. So even though you're capped, 5.8% is pretty damn good because it's far enough out of the money. Okay, well, sometimes you can't be too far enough out of the money for some of these tech stocks because sometimes they'll, so the only difference is you get a little less credit. So let's exclude 264,000, 230,000. It's the same trade basically. Just when you have the outlier case of huge moves, which you get occasionally in some of these stocks, you're on board for the ride where you weren't before. So that is it is definitely cool. The call spread is a great idea. Nothing wrong with the covered call, but the call spread is a nice alternative. It's a nice tool to have in your kit. It's a nice tool to have in your kit. Ask yourself, am I going to be mad that I totally capped my upside on this one? And then you can look to see what it costs to buy a call spread. In this case, you make plenty of credit either way, 260, 230. It's plenty of money. Jay's just going to pay the dividend with that. He could still pay a decent dividend with 230. And occasionally he's going to hit some of these big. He already has hit some of these big. So it's an exciting time to be an ETF investor and an option trader for that matter. Okay, so let's see what the market's doing. I'm going to let you guys get out of here. I'm going to go do the Alti report. So be tuning in for the Alti report. On the Alti report, we're going to look at probably 2 or 3 trades on option strat. And we're going to talk more about the strategy, but we'll look at every trade. And I have a spreadsheet kind of sort of built for Alti too. So be tuning in for that. But just as far as general stuff goes, my volatility indicator, and you can see here, this rate is still bearish, and it has been bearish since right here, since SPX 5807. Even though the SPX went up for the next couple of days, it stuck by its guns and it did not change. And so now it's looking a little bit smarter. So it's staying short. I'll let you guys know the second it goes back long again. So anyway, and this is the 30-minute time frame, and this is what we follow every day. So right now we just be cautious, probably looking for more downside, but this can change in a hurry too. By this afternoon, it could, or no telling. I mean, if it changes, I'll let you know. The last time it changed, it didn't work out all that well. It changed right here. It changed from bearish to bullish right here. So, these trades don't always work out. That was not a great signal. But this one so far, I don't know. It just tries to keep us on the right side of the market, the easy side, the high percentage side of the market. That's all this is. That's that's what I'm trying to show you. Okay, so this right here is just kind of up in front of the election. SPX is up 15 bips. NASDAQ is up 21 bips. Not that there couldn't be a huge rally or a huge sell-off at any time. I'm not saying that. And the most bullish is Russell. Russell's actually kind of giving the look of one of my bullish of a bullish trending trade. If it was on the other side of the 200 period moving average, it would be a stronger signal. But all right, well, we'll keep an eye on all that. Russell's leading the way today. I appreciate you guys for tuning in to the YieldMax report, the daily YieldMax Uncapped Upside report. All right, guys, take care. Be looking for the Alti report, please. Take care.